Welcome, everybody. Welcome to ZionCapitalFX. My name is Chance, and you are watching the video log series where we take somebody that doesn't know anything about Forex, the indices, the markets in general, and put them on the path towards financial freedom and consistent profitability. So in my last video, I called it Confession of a Bad Trade. It was about a trade that I took in the London session on the 21st, so a couple days ago, and I was tilted, right? I wasn't trading according to my strategy, my plan, and I was just grasping for straws, I guess. So because of that, I got into a little bit of drawdown in my account, and then I talked about the realities of trading and what it's like to take a loss, and not every day is going to be in the blue, and at some point you're going to take a loss, and it's about how you handle that really separates you from a rookie to a trader, or from a gambler to a trader. That's what separates you. And I want to talk about the trade that I took after that. I told you that I was going to take a couple days off, and I did just that. I cleared my mind, cleared my mindset, and I went into it knowing that I need to follow my strategy, I need to follow my risk reward, and I came out on top. I'm here to tell you that. So I want to take you, give you a glimpse of what's going on inside this noggin, and show you the trade that that did me good. So I'm going to share my screen, and what you're seeing right here is it's the NASDAQ on the 5-minute time frame, and there is the trade that I took. I'm gonna put it on the 15-minute, get a bigger picture. And you can see from a structural standpoint, that, I was still in that bullish mindset. You can see here the path tool, price is coming up. This is swing structure, makes a low. I was waiting for a retracement. And from this leg to that leg, I was waiting for a retracement, and you can see it hits that golden zone, the 0.5. So whenever it started coming into this area right here, I started really paying attention to price action. And so let's zoom in here. Now that you see where it's at in relation to the Fibonacci, I'm going to get rid of the Fibonacci. I'm going to get rid of this path tool. And so what you're seeing here, these two gray boxes here to the right of the position tool, and then to the left of the position tool. Okay, so the one on the left, that is Tokyo session, and the one on the right is London session. So this trade took place between Tokyo and London. And give you an idea of my strategy, I wait for the first hour of any market session to take place. And then it's what happens after that. The market gives me my bias. I don't come into with a strong bullish, bearish mindset. I let the market tell me what it wants to do, and I'm very reactionary with price action and the trades that I take. That being said, however, these last few days have been really volatile fundamentally. And when I say fundamentally, I mean news-wise. So we've got a banking crisis going on here in the United States. Silicon Valley Bank and Signature Bank and some others kind of went belly up. And come to find out that the banks really didn't learn anything from 2008, and that they were operating with no risk management department. I thought that was really interesting, and it kind of showed me and reaffirmed what I already think: banks are dumb. But that's neither here nor there. That's another deal. But I know the UK is having issues with their banks. Anytime you have other countries that are in an economic crisis, they tend to cling to the US dollar and the US markets. And so with that being in mind, I kept thinking that the market was going to rally. And Janet Yellen came out and said that the Treasury is going to do everything they can, the government is going to do everything they can to back the US markets. And then with the Feds, at the time they were talking about raising the interest rate. I just had this sense that fundamentally, maybe for a short term while, we're going to be bullish, right? And so I took this trade knowing that whether the market was getting ready to turn for the sell side or keep going on the buy side, this play was kind of like in between it all. It could have been part of a retracement. It could have been pro trend. I got in and out before the market really suggested which way it was going to go. So fundamentally, I had a game plan what I was doing here. You can see that this box is the Tokyo session, that first hour, according to the 5-minute time frame. And my position tool, there we go. Trading view updated. I waited, right? And so I saw this huge well, I say huge, but a pretty good reaction coming out of the Asian session. And you saw that Fibonacci earlier. In fact, I'll put it back up here again. I was waiting for something to tell me right around the golden zone that there was going to be a reaction, and we got it. And I'm gonna go to the 1-minute chart now. On that larger Fibonacci, it was at the 0.5, which is a great zone to be looking for a reaction. We saw that. Now I was just waiting for structure to give me the say so that it's time to enter the trade. And so here is this reaction from here to there is that reaction when it responded to the 0.5 level. And so I placed a smaller fib here to there and waited for a retracement. We came to the 618, which is the ideal premium discount zone, and then we got another reaction. This low never took out this low. That's really important. This did not take out this. This low was never violated. This low was protected. This is a strong low. So the other thing that you could look at is there was a change of character. So the change of character, in fact, I'm going to get rid of this Fibonacci. Change of character, I've got it right here. Let me zoom in. It's coming down, makes a high or lower high, a lower low, and then it breaks its own structure here. That's a change of character. That's a telltale sign that there may be a trend reversal or something's happening, right? It's just an early indication that something may happen. You may see a price action reversal. So it makes this high right here. And then what really convinced me, right, what gave me the conviction was that this low never took out this low. And when I seen that, I'm like, okay, things are going great. And then I waited for another reaction at this point. I didn't want to see this low getting violated because then I knew that price ultimately was setting up liquidity and could possibly purge all the buy side liquidity here and go further. It didn't go below this guy right here. And I don't know if you can see that. So I'm going to do this. This low right here, this reaction did not take out this low. So these are protected lows. So now I had a pretty good idea that I wasn't going to be, swept as part of a liquidity hunt. And with it being an Asian session, I can get away with some really, really tight stop losses. I went ahead just for comfort because I knew that I was going to enter this trade and I was going to sleep. I went to bed shortly after. I wanted a wider stop loss so that there was room for it to breathe, right? So when I saw this reaction here, pull the fib up again. When I saw this reaction come back, it came down really rapid, and this is where experience comes in. Some people are going to tell you wait for a candle close and all that. I'm aggressive when it comes to my entries. I have enough of a confirmation here that I was reactive when I saw this reaction on this bullish pin bar. There's this old adage that your stop loss is my entry. So sometimes when you wait for a confirmation, your confirmation candle might be really far away from where you really truly intended to get in the trade. And so, part of my mindset is I try to think, if I was going to try to find your stop loss, you're the retail trader, I'm going to wait for it to take out your stop loss, and I'm not going to wait for a confirmation to get in. I'm going to get in when the price is good and when structure's telling me. And that's what happened here. So, I was able to execute a market order right here. My stop loss is 20 points right here. And then I watched a little bit. And then once I saw this structure, so once I saw the break of structure and a continuation in my favor, and what I mean is from this point here, once I saw that, I was like, you know what? I'm gonna go to bed. I can rest easy, knowing that the odds in my favor, market structure was telling me it's a good time to buy. Fundamentally, I knew what was going on. I had this story built around this trade, and it worked out great. I followed my strategy to the T. My risk management was on point, and I was able to gain a 4.3% easily, all while I was sleeping. So what happened was, I like to get up for London session. I work full time. I am not a full time trader as of yet. I work full time at a power plant, and so I like to trade London session before I have to go to work. So I got up. I think it was like 10 minutes before London, and I opened up TradingView. I saw where price was at, and knowing that London session was about to open, I went ahead and closed out of the trade. And that's where you see this take profit right here. And that's where I was able to get the 4.3%. You can obviously, you can see that if I were to bring my stop loss, if I would have just, move my stop loss to end profit, eventually it would have went against me. London session just took out all that buy side liquidity that the Asian session left behind. And I'm glad that I got out here. Because that being said, the market doesn't owe us anything. Market doesn't care about our feelings. It doesn't care about our emotional and mental capacity. It doesn't care about our accounts, certainly. In fact, market makers, they're wanting to wipe our accounts. So, you never leave money on the table. And that was a good demonstration of that right here. I was more than content. 4.3% gain on an account is nothing to sneeze at. And I left it there. So it was that trade right there that got me out of drawdown. It got my account in a profit. And it was the first trade back from taking that psychological hit from that trade that I explained in Confession of a Bad Trade, number 1. You gotta clear your mind. You gotta stay focused and keep your nose to the grindstone here. You gotta put in the work, right? Not every day is gonna go your way. It certainly doesn't for me. But you just gotta keep plugging along. People are like, oh, you just need to stay motivated. You need to stay motivated. I think that's bullcrap. Motivation is only going to take you so far, right? It's discipline. Discipline is what carries you farther. It carries you farther than motivation ever will. And how do you become disciplined? By staying consistent. And I feel like that works hand in hand. So, what are some key takeaways? Follow your plan, follow your strategy, stay disciplined, stay consistent, and keep working at it. Right. I read a thing. It was about elite performers. So like the elite performer, like world performer, violinist. They've done studies where they think it's about 20,000 hours. That's how many hours it takes to become an elite performer. 20,000 hours before the age of 20. That's what I want to stress. You got to put the time under the hood to be good at anything. And anybody could physically click a button on the mouse and get in a trade. But you got to have the time, under the hood, understanding how the market operates, understanding market structure, understanding the mechanics of how this all works and ties in together. When you can do that and you've got that time under your belt, things are bound to happen. And I'm at the point now where things are finally starting to just, you know, I want to say come easier, but or in second nature, it's not quite there yet, but it's close, right? I'm at the point where uh I'm seeing things before they happen. And I know that sounds silly, but I can see the order flow, I can see the imbalances. I'm looking at the higher time frames. I understand the market is fractal, the market is in layers, and I can spatially see them layers in my head, and I can see where price wants to head to and where it's wanting to go. And it's a great feeling when all that time you spent honing this craft uh starts to pay off. And I'm living proof of it. So I'm going to stop it there. If you like what you saw, hit like, subscribe, hit the bell notification. So when I make more videos, you're going to get updated on that. Just a little taste of what's to come. I'm still going to do a mobile tutorial, not a mobile tutorial, a desktop tutorial on MetaTrader. I'm going to go over where we find our news events and how to interpret when news comes out and how that affects the market. We're going to go over trading journals. We're going to go over news journals because I think that's very important as well. A lot of people overlook the news. I have a separate journal. It's back there. I'm pointing at them back there. Those are some handwritten journals of how news events affect my trading. There's a lot that I want to cover, and this is all stuff that I want to get out of the way before we start jumping in the charts and start learning how to trade and how to look at the market. I promise you we'll get there. I want you to have this under your belt so that when the time comes, you know what to do, you know the programs, you know the apps, you know where to go, you know how to do that. Let's just focus on trading, right? So I think you'll agree with me. Consistent profitability, that's the goal. Financial freedom, that's the dream. And let's go. ZionCapitalFX, this is Chance, and I thank you. And until next time,